Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, September the 4th. The year's 2022. Let's talk trading. Weekly, open, and gap. These videos are for educational purposes only. Your results may differ from mine. And risk management. We're going into the first full trading week of September. Let's make sure we always have our risk management in place and we don't lose any more than we're willing to lose on any one single trade. A quick a quick look at the monthly chart, and we're only 3 pips off of the monthly low at the moment, which is also the weekly and daily low. And you can see we're 170 pips below the monthly open. Those of you looking for some green, might be a long time coming. We look at the week. We actually gapped down by 32 pips. And we're presently 23 pips below the weekly daily open. And as I mentioned before, we're 3 pips off that low. We're putting in the opening range for the week. As you can see, it's below the opening range for the month so far. A quick rule of thumb I might want to mention here when you're looking at this kind of price action. If it's below the daily open, look for shorts. If it's above, look for longs. Sure, you're going to miss out on the rat trade, and you might even miss out possibly on the daily wick zone trade, but might keep yourself out of a lot of trouble because, even my gut reaction's telling me, it's got to come back up, it's got to come back up, but that's not what my eyes are telling me, and the eyes beat the gut, just so you know. We are 2,074 pips below the yearly open. And okay, we're not going to have an inside bar on the daily. You can see we had one 8 days ago, and if you took that short, you'd be up over 300 pips. And we've got a handful or so of inside bars on the daily, weekly, monthly on the other pairs. Range right now is only 45 pips, so anything can happen. We had a couple of buy zone triggers, but nothing materialized. And you can see here we had a short zone. First time, may have gotten your fingers burned. Second time, you may have stopped out. Just depends on where you place your stop. But the third time paid off. Notice the crisscrossing of that weekly daily open. And it seems like over the past couple of weeks, just trading the daily open during the New York session, just going whichever way that H1 crosses it, would have paid off nicely. Rat zone, not enough range. Range is too low at the moment. Bambino flex indicator indicated a short. Pivot trading plan indicated shorts around the R1 and pivot point, but not even close. Near S1 had a long bias. It paid off, looks like once, maybe twice, but you don't want to go to the well too many times. So monthly missed pivot, weekly 4 times in a row has only happened 2 times. So this could be the 3rd time it's happened. And the daily so far is missed. Didn't even, we gapped down. We didn't even enter the lower wick zone. Weekly range only 45 pips at the moment. And you can see we had a nice weekly range last week, even though it was only at the 41 percentile. But say, anywhere between 40 and 60, that's right around average. Okay, looking at the wall method, let's put it back on H1 for now. And just trading with the wall lines, even during this Asian session on Sunday, looks like it would have been profitable. But just note, the ranges really aren't big enough to give you the wins that we like to see. And wins meaning those pips that you can definitely pop it for a couple of pips or more. But here we opened and we penetrated through the 60 and actually hit the 50. So there was actual potential for a 10 pipper. And it broke the previous H1 low. So there are pips to be had there. Once again, I'd be real hesitant to go long below the daily opener. Even if you do go long, like if you were trading a low or high, look for a couple of pips and then just get out. I mean, right here we went from 51 to 56. That's 5 pips, 4 or 5 pips you could have bagged. And as you can see here, it's kind of ranging. You could have done that a couple of times. And so you can see here on M1, this is a return bar. So you're going to be looking for price to go back to the 60 area, 114.60s. And notice we went into the launch pad here at 49 and came right back out. Now, for any statistical traders, so far we only have 166 pips in the month, but this is something to be looked at as the year-to-date accumulated pips. We're sitting at 22.99, almost 2,300. And you can see here, we are above 1, 2, 3, 4, 5, the past 5 years. It wasn't until 2016 when we had 3,000. Then we're above 1, 2, 3, 4, 5, 6 years. And then there was the big 2009, 2008 go-go years. And so right now, we've almost made as many pips as we quote unquote need to make for the year. So, we've got a potential to go further, but over the past, 20 years, we've had 1, 2, 3, 4, 5. So 5 or higher, 14 or lower. Does that tell you anything? Does it mean anything? Who's to say? It could go on to set an all-time, it could break. It could drop another 4,000 pips over the next 3 months, 4 months. Who's to say? So once again, trade what you see. If you see price dropping, then it's dropping. If you see it rising, then it's rising. I know it sounds so simplistic, but trading can be simple, or you can make it as complicated as you want. And as far as a percentage, we're down 15%. And as you can see here, we've got 1, 2 years that have been more than 15%. So, and we still have pretty much almost 4 months since we're only in the third trading day of September. So, still a lot of time out there left in this year. So, we'll just have to wait and see what the pound has in store for us. Trade reminders just been telling us seller strong control for a long time. So we'll just have to wait and see. What price decides to do. Coming back to simple methods, it really is funny to me the emphasis or what people emphasize in trading. And so many people place emphasis on indicators. I mean, that's what I got started out because my background is programming. So yeah, I coded up whole thousands of indicators over the past, almost 2 decades of online trading. But the reality check is, after all my work, I used to, weekends, I can remember working on TradeStation code, running those different moving averages and linear regression. You could see some of my work out there on StockFetcher back when I was trading equities. Then I just came up with some simple methods. The buy zone. It was so simple. And then from there, we had the rat zone and the wick zone, fading the pivot, fading the opening gap. But the fades, those really weren't my methods. All I did was I just put some statistics to say, hey, you know what? These work more often than not, and Vegas would kill for these odds. So why not trade them? Then came the wick zone. But, those were pretty much all horizontal line based trading. And the thing is, I think where you can know if you're a trader or not, I mean, a real trader, if somebody were to hand you a laptop and you look at it and they've got some open trades that you could actually trade those trades, meaning, do you close them? How long do you keep them open? When do you take profit? Because once you click and enter a trade, that's all that's left. That's the real active part. Now, of course, waiting and waiting and waiting for those killer opportunities like some people do. Like you might be waiting right now for a reversal. And depending on what you see on the chart, you may or may not nail it. So we'll probably get more into it this week. So I hope you had a fun and safe weekend. It's a holiday. I think tomorrow's not going to be much action. So remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.